Welcome to 88 Minds.
I just we have got Gianluca, the Chief Operating Officer of Valr, Ciaran Ryan, the editor, host, writer at moneyweb, Fadil Moti, the CEO and founder of 88, and myself, the Chief Investment Officer of 88 as well, Ciaran. Fadil, do you just want to give an overview of what 88 is? What do we do? What products and services do we offer?
Yeah, absolutely. So 88 essentially is a global payments company, and that's what we've structured ourselves as a global payments and crypto company, offering all types of services to our clients, both B2B and B2C. Whether it may be buying or selling assets, moving money. That's what we are. And that's what we focused on. We focused in the South African market. That's where we grew. And we've expanded ourselves into Europe with our VASP. We've expanded into the UAE with our market making company, where we have relationships with multiple liquidity providers. And we've been focused in bringing all these types of services that have been growing in the industry into one intuitive platform that our customers can access.
Yeah. And Gianluca, can you tell us about the South African exchange, Valr?
Yeah, absolutely. So Valr is a cryptocurrency exchange founded originally in South Africa. We're licensed in South Africa, also licensed out of Poland for the European market, acquiring a few more licenses in the Cayman Islands and the Valr license in the UAE. We are, by trading volume, the largest cryptocurrency exchange in South Africa and one of the largest exchanges on the African continent. We offer a wide set of products: spot trading, spot margin trading, futures. We have staking, lending, and payments products as well. Really excited to be here today and to join you guys to chat about stablecoins.
Awesome. Guys, I think so all of us are well versed on stablecoins, but just for our audience, I want to break down, before we get into diving deep into all of the questions, I just want to break down the basics quickly for all the audience. So stablecoins are able to maintain a stable value one-to-one by pegging to external assets like fiat currencies or commodities. The stablecoin market cap reached a record of market capitalization of $228 billion, projected to be $2 trillion by 2028. Stablecoins, on a general, provide swift and affordable payment processing, making them particularly valuable for international yield farming, liquidity provision. In this case, smart contracts can automate payments, escrow management, subscriptions with built-in logic on the blockchain network. However, there are anti-stablecoin discussions, which is counterparty risk, where the issuers like Tether and Circle, third-party issuers, reserve management concerns, and most of all, illicit transactions. Currently, guys, there is this ongoing sort of fad happening on all the social media platforms that stablecoins have surpassed a combined transaction volume of Visa and MasterCard by $27.6 trillion. However, data shows that 70% of that is bot activity, and 45% of that bot activity actually comes from crypto trading. Considering Valr's role in crypto trading, mainly for traders who are trading, Gian, maybe just want to go through how are people utilizing stablecoins on your guys' exchange? If so, which type of stablecoins are they opting for? And what is the general reason they opt in and out of these stablecoins? But number one, do you see growth in your database for these stablecoins?
Yeah, absolutely. So I guess the first thing to mention is that the stablecoins that are most used globally are dollar denominated and typically backed by dollars in a bank account. So the digital asset, USDT or USDC, both of which are available on Valr, represent $1. 1 unit of USDT or USDC should represent the value of $1 and is backed by dollars in a bank account held by the issuer of that stablecoin. So USDC, for example, is a stablecoin issued by a company called Circle. Circle is a regulated financial institution in America. They hold a large amount, almost $60 billion, I think, of reserves against the issued USDC that is in circulation globally. So on Valr, one of our largest markets is US dollar stablecoin to South African rand trading. It accounts for, at times, 50 to 60% of all trade on spot markets on Valr. So it's a massive market specifically for us and for our exchange. We offer USDT, USDC, both of which are backed stablecoins, 1-for-1 with dollars. We have DAI, which is another stablecoin that was issued probably in 2018, I think. And those three stablecoins account for most of the trade that happens, and holdings that are held on the Valr exchange. Now, people have a number of uses for dollar stablecoins. The first, perhaps most obvious use is people want to maybe save in dollars. So we see a number of people who are perhaps concerned about holding their money in either volatile crypto assets or in volatile fiat currencies. Historically, the South African rand has not performed well when you compare it to the dollar. And so part of the use case is here is the world reserve currency presently that people can hold on to, can save in. They protect themselves from currency devaluation in other markets, and we've seen that. A lot of interest of people holding dollar stablecoins. Specifically, traders oftentimes like to actually take their profits back into stablecoins when they want to exit a particular position, or have a view that maybe other crypto assets are potentially going to go down in price. They can sell those assets into dollar stablecoins. Valr and many other crypto exchanges have very deep and liquid markets to trade crypto assets into dollar stablecoins, and they'll just park their in USDC or USDT while they're waiting for an opportunity to trade in assets. Finally, the last big bucket that comes to mind for me is that there's a lot of remittance and payments activity using stablecoins now. I think
That are you seeing that through the exchange?
yeah, definitely. I mean, Valr, we've got a Valr Pay, a payments product that allows people that are on Valr to pay to each other, and even to pay outside of Valr to go and buy groceries at Pick and Pay and places like this. And a lot of the actual activity there is in dollar stablecoins, and predominantly USDT actually today. Yeah, and so I think this is an interesting trend to keep abreast of, to be honest with you. Like, I see a future where payments activity is absolutely going to move on chain and move into dollar stablecoins. I also think you're going to continue to see the dollarization of many parts of the world take hold as people decide to hold dollars and transact in dollars because it's so easy now with dollar stablecoins compared to transacting in local currencies. This is a trend that you're seeing all over the world, and a lot of that is happening in Africa.
Super interesting. Yeah, I have an interesting question there, and I think this is purely has to do with the two different types of stablecoins, right? So we've mentioned that Valr has USDC, USDT, and DAI as well. And I know that Valr, I think it was last year, the year before, listed USDT, where previous years it was only USDC. Did Valr see a huge uptick in volume because of listing USDT in terms of its trading activity and payments activity? And do you see a significant difference in the tradable volume between these two stablecoins as to why there's that difference in volume? I mean, so we see it. Eager to know on your end.
Yeah, definitely. Yeah, so we listed USDT a few years ago now. So a little bit of the backstory there. Valr was actually just as our to crypto trading. And in fact, when we first started, it was Bitcoin, Ethereum, and those two traded against South African rand, and that was it for a while. When Circle became a little bit more prominent in the crypto space, we're talking 2020 timeframe, we thought it would be really important and useful to us to actually add USDC as an asset on our exchange and start spinning up pairs that trade crypto to dollar stablecoin. It was already at that point globally crypto to crypto trading, specifically crypto assets to dollar stablecoins, was huge already, and it was a natural progression for us to do that. It took us a little bit longer to thereafter list USDT for a couple of reasons. One of those was that we wanted to do a good job of making sure we felt comfortable with listing Tether. There was a time where it was a challenge, right? That the entire industry was kind of rallying against this idea of a centralized party that held funds and wasn't properly audited or didn't disclose clearly how those assets are actually managed. And we took some time to do a proper investigation and then list USDT thereafter. Globally, Tether is kind of 2/3 of stablecoin market cap today. If the entire market is roughly $240 billion, a large proportion of that is Tether, and the next largest issuer is Circle. We found that when we listed USDT and we had both USDT and USDC available on Valr, USDT took over. And today it accounts for 80% of stablecoin trade on our exchange. Now, the reason for that is USDT is actually dominant in the global south as a method for storing value and transacting. for payments. A lot of that is because if you imagine there's a lot of Asian influence in the global south and in Africa especially. And so, the tether is something that is massive in the Asian market, and that has kind of spilled over into other parts of the world, and specifically South Africa and Africa. I think this is true, where it's just the preferred mode of transacting for this part of the world. And that's been clear to us that the trend is towards people preferring USDT over other alternatives. You can imagine that USDC is a very Western asset or product, right? It was launched in the US. It's very much preferred in US-centric markets, whereas Tether is much more prevalent in other parts of the world.
So it's quite crazy. So a stablecoin designed to be regulated is less popular than a stablecoin that is mostly used in outside of dollarized markets.
I think I want to get all three of you guys comment. Ciaran, maybe your insight to this as well from what you've been writing about. Gian, you just mentioned that most of your people who are holding stablecoins are using USDT for Pick and Pay, Valr Pay. We've also seen this on our side with 88 Pay as well, cross-border payments specifically, all USDT based. There has been trials, other exchanges have released and issued as our stablecoin. Do you guys see a future where as our stablecoin is prevalent, people are actually almost sitting completely in either wallets, non-custodial wallets or exchanges, and they transacting on a daily basis with Azar stablecoin in South Africa or an African-based stablecoin? Or do you think there's the argument now that it's a dollar hegemony is now moving away from the petrodollar into the stablecoin hegemony? So maybe I can get you guys' comments on that, Ciaran.
Yeah, I mean, that's an interesting one. Everybody's been predicting the demise of the dollar. I think they were talking about the fiat dollar, and I think that's certainly the case. But the stablecoin story is a remarkable one because just looking at the stats here now recently, total transfer volume in 2024 was 27 trillion. That's bigger than Visa and MasterCard combined. And you sort of wonder, this came out of nowhere. This is a story that's been developing just over 5 years. Of course, the big reason for it is that it's just so much more efficient than dealing through the banking system. Anybody in South Africa who's trying to transact abroad and send money out of the banking system knows, you got to go to the website, you got to click on this button that says BOP, which stands for balance of payments. You got about 30 different categories there you got to choose. It's just very complicated and slow. So stable coins, that can settle in, you can send this to anywhere in the world in seconds. At much lower cost. And I think this thing about remittances as well, that's a huge story in Africa because countries like Gambia and Gabon, in Gambia, I think remittances account for almost a quarter of GDP. A quarter of that economy comes from people who are working abroad, sending money back to the family at home. And then you go into the costs of sending that money from wherever it is in the world. I do this exercise every now and again, just trying to send money from Joburg to Kenya, for example, and you look at what the banks are charging. It's sometimes up to, believe it or not, 30%, and I think even 40%. That's for small quantities of money. And you come to stable coins where it's about 1% and getting less because it's getting more competitive. So to say that there's a revolution happening in this space is an understatement. The other big thing, and Gianluca just touched on it a while ago, is the ability to basically dollarize your life, that you can, as a South African or a Zimbabwean or Zambian, you can convert your local rubbish currency. I'm not using that a little bit glibly. You can convert that into dollars. So yes, on a transactional side, you're always going to need some money to transact locally, but your savings, you can put that in dollars or you can put that in Bitcoin. And I think people, once they've exited the fiat system, and Gianluca's just been giving us a little bit of his experience at Valr, people don't want to be off-ramping back into fiat and then back into crypto again. So they're going to stay on chain. And I think you guys probably got more experience with this than I do, but what I'm hearing is that Africans are waking up. They're seeing the potential for this. And in a sense, it's it's almost like, what the cell phone did to Africa. Information that was available all around the world became instantaneously available to anybody with a smartphone. And I think the stablecoin phenomena is going to do the same to savings when people realize it. And I think it's got to become a little bit simpler for people to convert from local currency to a stablecoin. But I know that Valr and people, Luno, you guys at 88 as well, are doing a lot of good work on that, just making it simpler and safer for people to do that. I think this is probably the biggest story that we've had in the financial world in the last 5 years.
Let's touch on regulation a bit there, right? I mean, capital controls, exchange control, something, we deal with on a daily basis, right? Operating a foreign payments desk and being a TOC very plugged in with the Reserve Bank and what the exchange control rulings. I mean, the stablecoin adoption seems to have this big barrier in place, especially in South Africa, which is exchange control. Ciaran, Gian, what do you guys think about that? And where do you see it going when it comes to regulation?
Well, we recently had this court case where this was addressed actually as a byproduct of a court case where a company was being liquidated, and in the process of that liquidation, it was found out that a fairly large amount of money had been sent abroad to a crypto exchange. And the court found initially that this did not fall under exchange control laws. And then the Reserve Bank came out and immediately appealed that case. So basically they froze whatever the impact of that judgment would be. The bottom line is, yes, cryptocurrencies now fall under South African exchange control laws. But I would say as a more general comment that we are going to be forced to look at this whole thing of exchange controls very, very seriously as a country, because the technology is just streets ahead of where the regulations are. And this is an old apartheid era legacy. We were always trying to protect capital from leaving. One time we had 2 rands. You guys are probably a bit too young to remember this. There was the financial rand and there was a commercial rand. And it was one of the biggest scams that was going on in the country, because at times, so there are 2 different rands. The commercial rand was the rand that you would transact with if you were an importer and an exporter, or you were sending money abroad for whatever reason. The financial rand was for financial purposes only. And there was a gap, a difference in the rate between these two. And at times it got up to 22%. So what people were doing was they were round tripping it. They were sending money abroad at the cheaper exchange rate, and there's arbitraging basically in South Africa. And the newspapers are full of stories of these dreadful criminals who are arbitraging between the commercial and the financial rand. That was a product of capital controls. They eventually did away with that difference between them. You only have a single commercial rand now. But the whole reason we have the arbitrage market in South Africa for crypto is, again, a legacy of that, because we've got capital controls. Back in 2017, you would have the difference between Bitcoin and Kraken and Bitcoin on Luno, at times 8%, even 20%. But now, of course, it's because it's got so competitive that has dropped. My point is that we're going to have to look at this whole thing of exchange controls. People would say that in effect we don't really have exchange controls, because you can get 11 million rand out of the country every year as an individual who's tax compliant, and I guess that is true. But you still have a lot of, you're asking permission. You're having to go to the Reserve Bank and ask permission to send your own money abroad. Most countries are not doing that. That there's a much more freer flow of capital. So I think this technology that we've been talking about, stablecoins, is going to attack the effectiveness of capital controls very, very quickly.
I think it highlights what a barrier to just free movement of capital exchange control has been in the South African market. My view is money will flow in a manner that is most convenient for people. They will find a way, right, to transact in the manner that they need to, really. And to Ciaran's point, I think, exchange control is a very old set of rules. It's something that is in desperate need of revision and to be updated. And that court case actually that was mentioned, right? The ruling of the court presently is still that exchange control as it currently stands does not apply to cryptocurrency transfers. That's under appeal by the South African Reserve Bank and the Treasury, but that will then need to progress and be assessed by, I think, the Supreme Court of Appeal is going to be looking at this next. So it's going to be very interesting to see how they...
But my understanding, Gian, is that because it's been appealed, exchange controls apply. Maybe your legal guys have a different opinion on that.
I think you're probably right that in the present state, it's a wait and hold, wait
yeah.
and see kind of situation. Yeah, for the time being, it is still to be decided. what the answer is, but people should be careful. And they should be transacting in a legal manner.
I think another point about this
Yeah.
is just talking about stablecoin as a phenomenon. You look at they recently passed this Genius Act in the UK. Sorry, not in the UK, in the United States,
US,
which is
yeah.
basically the first sort of regulation that is governing stable coins. And that's probably going to be the template that's going to spread around the world. Essentially, what it is saying is that you're going to have to collateralize these dollars. So every time you purchase a stable coin, you want to make sure that there is actual assets, cash assets or near cash assets in the form of treasuries and so on, to back that up. And you're going to have reporting requirements as well. And these are monthly reporting requirements. Now, Gian, you touched on this. In the early days of Tether, there was a lot of suspicion that it was not properly collateralized. In other words, if you were buying a Tether stable coin, could you be sure that it was worth $1 or was it perhaps worth 95 cents? And there were times when the Tether peg actually fell out of sync. But I think that argument has been settled, and I think people are very comfortable with both Tether and with Circle as well, which is USDC. So you're going to see this progression of regulation. It's going to make it more interesting for institutions to start looking at stable coins as well. So I think the adoption we're at the very, very beginning of a massive uptake here that's going to just blow the lights out in the next few years.
I think like 5 years ago, you would have taken it for granted that you'd have to wait if you wanted to transact over a weekend to make a payment to somebody. Today, payments are instantaneous, effectively, using crypto assets, and they are extremely cheap. Right? We're talking fractions of a cent, if that, to send on specific blockchains, to send stablecoins from one wallet to another. It's just an order of magnitude better for the user to actually transact with. And we're seeing that regulators, and especially in the US, are taking a very keen interest and very, very positive outlook on stablecoins, especially dollar stablecoins. The reason for that is partly that they have understood the fact that a dollar stablecoin that is issued is demand to hold US dollars firstly, and actually by extension, for a lot of stablecoins in the world we live in today, demand to actually buy US treasuries, which is quite interesting. So historically, dollar stablecoins, USDT and USDC, they never paid any yield to their customers, right? You could hold dollars and that's all you got. The actual issuer would be able to invest in US treasuries, short-term debt, things like this, and actually earn pretty healthy returns on that, on those dollars. That's changing today, where people are demanding that some yield should be passed through to customers, and that's leading to the issuers of stablecoins actually going and investing in short-term treasuries to go and actually earn a yield that can then either be partly for their own profit and partly shared with consumers. And the US government has identified this and understood it, and they think that this is the largest source of demand for short-term treasuries in the future, is actually dollar stablecoins. I think you're going to continue to see that the US is going to be forward-looking and really keen on the growth of dollar stablecoins globally.
I think that's quite important for them as well, because that props up the dollar, right? More short-term treasuries being bought up, props up the dollar, keeps the dollar stronger for a longer period of time. I think the controversial question I have is that there's regulation for issuers, right? I think that's clear. We're seeing that in the US in terms of how they need to govern themselves. But what about the regulation for the user? Because that's the most important piece of the entire puzzle. Because the more users you have, better for stablecoin issuers, better for transacting in the economy as a whole. And the controversial question that I have is, are users, maybe South African users predominantly, do they care about regulation? Do they care about exchange control? Or like you said, Gian, they will find a way to transact. Are they okay with breaching, the so-called exchange control regulation? And that's what's quite interesting to us, right? Because we are seeing stablecoin use for capital flight, for payments, for whether it be localized or cross-border payments, e-commerce payments in a retail store like Pick and Pay. How does this fit? How does this exchange control or this regulation fit in for the user? And where does it fit in? And if it doesn't fit in, what is the user going to do? Are they going to advance and adopt more stablecoin usage and saving dollars, and instead of holding money in a CFC account with FNB or Discovery, and you can now hold your funds in stables? I mean, a very interesting thing we've seen on our side is, as a treasury provider, a payments facilitator, we've seen our clients have an eager interest in hedging themselves in dollars. So instead of taking forward cover, for example, or even holding funds in CFC where they are required to have an underlying commitment to move the rands into dollars and the dollars and to hold it into CFC. And then they have a limited time that they can hold it in CFC, whereas if they just hold USDT or USDC, they have an indefinite time. They can, yes, they have a premium coming in, but they can capture the same premium going back out. And they're exposed to dollars for any amount of time in their own control. I mean, that's been the uptake in interest from our end. So, and why we have this question is that a breach? Do you as a customer care about that breach? What we're finding is, no, I just want to hold dollars.
Interesting example is when the ruling was released, before the SARB appealed, the ruling that XCON as it currently exists does not apply to crypto assets. You might have expected that you would see a massive increase in trade of rands being sold to buy dollar stablecoins. That didn't happen, actually. Right, so this idea that it leads to a massive prominence in capital flight, so that's what's on people's minds who are trading these assets, I think there's an example. Maybe it's not the general rule, but there's an example that indicates that it didn't actually mean that there was a massive change in these flows of funds into and out of stablecoins. Now, I think if you think broadly about normal people, everyday, consumers and perhaps investors, those who just want to hold exposure in dollars, a lot of people don't actually understand exchange control, right? So it's not on their minds. It's not something that you naturally think of, like, do I need to consider this, really? As you said, Fadil, it's like the question is, what do I want? And maybe I want to hedge myself in dollars. And so they'll do that.
Yeah, it's not a selling point. Exchange control is not a selling point.
That's the first consideration. Is that it's not in their heads to kind of focus on this or understand it really. It's hard to understand for a lot of people, I think. Second to that, I think something to keep in mind for those that are doing their homework and listening. Currently, there is no clear indication of whether when you buy crypto assets, they are onshore or offshore, right? And the current state of affairs in South Africa is that if you are buying crypto assets on a crypto exchange that is South African domiciled, like Valr, that money is still onshore. So you're actually fine. You can buy a dollar stablecoin in South Africa on Valr, and you aren't in breach of any exchange control rules. You're not even in breach of what you mentioned, holding dollars for an extended period where you shouldn't be. US dollar stablecoins are not seen to be US dollars in the South African legal framework presently.
So, Gian, while you were talking, I was super interested of what you said about US Treasury bills. So over here, I pulled up Tether holds $150 billion worth of US Treasury bills, making it the 19th largest owner of US government debt, larger than Germany. That's like super interesting when it comes to because as
I
the
think-
Senate just... Yeah.
There's a point that needs to be raised on the stablecoin story as well. And I'm interested what Gian just said, that where there was this perceived window that people could export massive amounts of capital because stablecoins or crypto were not deemed to be subject to exchange control rules in South Africa. So it didn't happen. And I think the explanation that you've given there is that it's not on people's minds. Are they going to bypass these regulations? I think absolutely. It's a water flow. The water's going to flow the easiest route out. And people, it's almost comes down to natural rights. This is the kind of ethos in which Bitcoin was formed back in 2008. It was an act of rebellion against a financial system that was just crippling to billions of people around the world. And, stable coins is not exactly in that same ethos, but close. And it does provide opportunities for easier movement of money. And I think one of the things that it is highlighted, particularly with the passage of this Genius Act in the United States, where they're going to have to report that the stable coins are properly collateralized and backed. We're going to have to look at the banking system, because the banking system is operating on a fractional reserve system where customer deposits are lent out multiple times, 8 or 10 times, whatever it is, and that's determined by the Basel Accords, the Bank of International Settlements. You look at that where you're depositing in a bank and you're trusting a bank which has leveraged your money 8 to 10 times. And you're looking at a stable coin, which is not leveraged at all. It's 1-to-1. And this is why Tether, by the way, did not want to open up in Europe, because Europe has got very strict laws on this. They were required to put 60% of their deposits in the European banking system. Now, if the same thing, when banks start to enter into the crypto space in South Africa, which I understand is about to happen, you guys have probably heard, that this is imminent. They've already developed products for custody, and then they're going to be on your app. You'll be able to buy Bitcoin and presumably stable coins as well at some point. But are they then going to lend that money out? And if they're going to lend it out, are they going to lend it out multiple times, as they do with customer deposits? That poses a risk. And these are questions that we're going to have to ask when the banks do come into this. So stablecoins allows you, and companies like Valr, I think a huge opportunity is just to differentiate. And 88, by the way, differentiate yourself between this very stable model of, not fooling around and lending other people's money out without you knowing about it. And so we enter into the whole neobank space. What's that going to look like? And maybe, Gian, you've got some thoughts on that.
Yeah. I mean, we absolutely are fully backed as a custodian of assets on behalf of our users. There is absolutely no fractional reserve lending or anything like this going on an exchange like Valr. And I think that's true. That will always be true. I can speak of Valr specifically. Part of the ethos in the crypto space is a little bit more actually conservative, would you believe it, than traditional finance, right? In that we feel the effects of under-collateralization and some of the negative impacts that have happened from fractional reserve banking historically. And that definitely is part of the ethos that drove a lot of people into this space in the first place. It's an important factor for a lot of our team at Valr, and something we think about frequently. So yeah, I mean, as it pertains to stablecoins, actually, something that might be interesting is that the Genius Act that has been now promulgated places an emphasis on fiat-backed stablecoins being the version of stablecoins that are acceptable. Right? They have to have dollars in a bank account. They need to be fully reserved. There's a lot of experimentation that's happened in the crypto space. And there were a few other categories of stablecoins that were created. One other category is asset-backed. So DAI was originally like this. It was backed by Ethereum, or at least a portion of the assets underpinning DAI, the stablecoin, was Ethereum itself, which is volatile. It creates some challenges with maintaining a peg of 1-for-1. One other category of stablecoins is algorithmic stablecoins, which had no underlying assets. Tether Luna is a notorious example of something that was purely algorithmic, had no assets underlying, maintained a peg for a certain amount of time, and then completely imploded. So I think the entire industry and regulators are taking the lessons of assets being properly reserved and applying that to dollar stablecoins specifically. So I think you'll see that the dominant stablecoins will continue to be those that are backed by real assets, whether true fiat, dollars in a bank account, or close to fiat assets like very liquid treasuries and short-term notes.
Do you think that a South African ZAR-based stablecoin or stablecoin issuer would provide any value economically to South Africa?
I think it's a good question, and I'm really curious about the idea of how much of the stablecoin space is non-dollar denominated in the future, broadly speaking, right? So the fact of the matter is today that there is no other currency that has significant market capitalization outside of dollar stablecoins, right? So there is Circle have tried this. They've issued what is called EuroC, which is available on Valr as well. It's a euro stablecoin. The market cap of that is tiny compared to and it's yet to gain real traction. Now, does that mean that it's dead, or does that mean that it's early? Is the question, right? And it might very well be the case that we're just early to this adoption, broadly speaking, of stablecoins in all markets. I still think that stablecoins are a better method of transacting than traditional fiat currencies. And that's true regardless of the currency you're actually transacting in. So again, in South Africa, you can really transact 5 days a week between business hours, right? If you want to do, for example, EFT or wire payments. With a Rand stablecoin, that becomes 7 days, 24 hours a day. That's a benefit. Right, that's probably an improvement. There are still certain risks. You're still taking risk against an issuer if you're going to use a Rand stablecoin. We've got at least one issue in South Africa that's, for all intents and purposes, pretty well regulated and reputable. ZARP is an example in South Africa, which is a good product, but one that has not yet gained significant traction. We have to see where the world goes. I think for now we're bullish on the space. Excited about the growth of stablecoins. Think they make a lot of sense, and we'll see if they expand beyond dollars. The only thing that makes me think that dollar stablecoins continue to dominate is this idea that a lot of the world would prefer to transact in the most stable currency they can. And while the dollar dominance around the world is being called into question right now, I don't see that changing very quickly. And I think a lot of the world would rather hold dollars than other fiat currencies. And now it's easy to hold dollars using dollar stablecoins. And so a lot of the world, I think, will continue to adopt dollar stables for now.
As we sort of reaching the end, I want to just ask one final question from each of you, which is, what is the boldest vision you have for stablecoins and crypto in the next 10 years? I'm going to go first. I personally think that I don't think ZAR stablecoin, I don't think EuroC, I think they'll have some sort of short-term impact in the upcoming years, 3 to 5 years. But I think all of that will eventually move over to mostly move over to dollar-denominated stablecoins. I think once we reach the 10-year mark, we are going to start moving into something. I think I'd predict that 30% of the world is going to start moving into something called network states, where there are specific currencies for specific things or specific stable coins for specific things, particularly for that purpose. You see it already happening now with like JP Morgan. If you want to transact with JP Morgan, you have a JP Morgan stable coin. If you're transacting with a certain circle of institutions, you will probably have to adopt a certain stable coin. But that will just be the bipartition of you naturally holding Bitcoin or any other cryptocurrencies in general. And the world will naturally move. It's like smoking a cigarette and then getting onto drugs. I think stablecoins is smoking a cigarette, and then eventually the world will move on to drugs. So that's kind of my prediction in the next 10 years. Do you want to give yours?
I think you've touched on something that is vital, because this is the essence of, the whole human story is one of quest for freedom, and central to that is money, and how free are we to transact with money, and how free are we to make money. And there's an old economic principle that good money drives out bad money. I think that you're going to see tremendous upheavals in the economies of emerging market countries in particular. I do agree with Gian that I don't see the dollar disappearing, because what people want is just to transact in something a little bit more stable that holds its value better. The dollar's not at all perfect, but it's better than the Nigerian naira, for example, which I think, and I looked at the stats, was down 40% last year. The Malawian kwacha down 20%. The Zimbabwean zig. All of these are failing. And if you're living in these countries and you've worked all your life and you've saved your money, just to see those savings just frittered away by this reckless behavior of the central banks. And now you're presented with an opportunity where you can actually stop that without asking anybody's permission. You are going to see what would be the right word? This very massive adoption towards stablecoin. But even stablecoins in itself, not being perfect money, I think you're going to see dawning realization that probably Bitcoin is a better form of money. We're not there yet. It's just not that easy to use. But what it has shown is a store of value property that, if you look at house prices in South Africa in Bitcoin, and you look at anything in Bitcoin, it is the superior form of store of value. So yes, I see stablecoin as a means of transacting, but as a store of wealth, I see eventually Bitcoin being the preferred form of money.
I disagree with that one bit, and I think that everyone should be accumulating their Bitcoin reserve and even accumulating small amounts of Bitcoin. And that's what, Valr, 88, Luna are all purely focusing on for the user. And my prediction over the next 10 years is that movement of money in stable coins is going to become a common phenomenon. And that is going to become frictionless throughout the entire world. It's just going to be so easy to move into different currencies, whether you're on-ramping or off-ramping, or you're just settling for purchasing goods in stable coins, which is quite popular in Asia right now. So, our big market for capital flight has always been Asia, where we've seen goods being settled with stable coins, where Asian counterparties who are exporting any type of textiles, shoes, any type of manufacturing items that are exported to any part of the world are happy to be settled in stable coins. And I think that's just going to become more and more. And even if not, what's going to become popular is, the use of different types of OTC desks or on-ramping and off-ramping service providers that are going to coexist in the world together, that will eventually create what 88 always likes to envision is moving into new circles and making money moves, and being able to frictionally move money anywhere in the world with ease and spend that money as well, even down to the actual layman user, all the way up to the institution who is actually just moving large amounts of liquidity around between different pools or different jurisdictions. So I think that's going to become very popular, and volumes is just going to tremendously grow.
I agree with a lot of what's been mentioned. Crypto gives me a lot of hope for the future, actually. I think my prediction for the next 10 years is that you see markets become freer by necessity, because of the cat is out the bag, and the ability to a digital store of value like Bitcoin, or to transact using a much better way to make payments like stablecoins is a real and substantial improvement over the way the world was even 5 years ago. I think you continue to see the crypto industry grow significantly. I think you'll see dollar stablecoins reach trillions in market cap from the 200 billion that we're currently at. And I think you see people having the ability to transact and save better as a result of this industry growing.
Agreed.
Awesome. Thank you so much, guys. Fadil Moti, the CEO of 88 and founder, Ciaran Ryan, the editor, host, and writer for MoneyWeb, and Gianluca, Chief Operating Officer of Valr. I appreciate the time, guys. Thank you so much. Thanks a lot, guys.
Thank you.
Thanks for your
Thank you,
time.
guys.
Jan, it was amazing chatting to you. Ciaran, always thank you for your time. Have a lovely weekend, guys, and we hope to catch up with you guys soon again. This will be fantastic.
Welcome to 88 Minds.